All right, so both Amazon and Microsoft exceeding analyst estimates on both the top line and the bottom line. Better sales, better EPS. Amazon also agreeing to buy back up to $2 billion worth of their shares. We've got Keenan Hauke, he is the president of Samex Capital Partners in Indianapolis, on the line to give us a little bit more color as they describe it. All right, Keenan Hauke, welcome to the program.
Well, thank you very much, and I appreciate the use of the word color, because right now all I see is white everywhere in Indiana.
All right, Keenan, explain what's going on with Microsoft. Good results having to do with the introduction of Windows 7. You still like the shares?
We do, and Microsoft is a great stock because it serves as a lower-risk proxy for the overall market, which we know has been trending up more or less since March of '09. And we believe the uptrend, while it's disturbed right now, is still going to see some new highs over the coming months, and Microsoft could be a great example of that and a way to play it. Interestingly, though, I've been amazed at Microsoft with all the switching to the Linux operating systems and away from the monopoly powers that they held in the 80s and 90s, and now with the introduction of the Apple computing systems, they're still finding ways to completely blow doors off. I mean, it's pretty impressive.
Is this because of the strength in the enterprise that companies are coming back and starting to spend money with their IT budgets again, Keenan?
Well, that might be a quiet way to look at it, but Microsoft surely isn't talking about that. They're saying it's all due to the release of the Windows 7 operating system and how they sold more issues of and licenses of the operating system than any other release in the history of the company, which is, again, a pretty amazing feat for Microsoft. And you're right, I'm more of the opinion that you're slowly, very slowly, starting to see businesses begin to make some longer-term commitments to their own operations, which would include plant infrastructure and, of course, major software outlays.
Keenan, what about the yield on Microsoft? Does that also give you some comfort when buying the shares?
Yeah, you know, it puts a floor on the operation, the no debt, still the rolling in cash. I mean, every time you think that these guys have found a way to spend down their $40 or $50 billion hoard, they pile on another 10 or 12 billion a quarter, and it just it keeps them from really getting too far on the downside. Strictly on a chart basis, Tim, on a stock trading basis, the stock had a gap up a few months ago from 27 to about 28 and a half or so. It looks to me there could be some downside risk in coming days, maybe weeks, to that 27. But I believe, as you mentioned with the dividend, that is the floor for coming months.
All right, talking about a downside risk, when you compare a stock like Microsoft trading at a forward price-to-earnings ratio of about 15, take a look at what's going on at Amazon.com. This is a real growth stock, valued at what, about 40 to 50 times estimated earnings. What's going on with Amazon.com?
Well, they really created a ton of excitement a few months ago after their Kindle had been released for a while, and they started to gain a lot of traction. And the stock just took off after the third quarter release. It broke 100 and really almost never looked back. And now you're seeing a correction along with the rest of the stock market. And Amazon, although it has more downside risk over the near term than Microsoft or some other big blue chip companies, I believe you have a floor on that as well from the breakout right above $100 a share. I don't see downside below that. And as the earnings came out this afternoon, Tim, the stock gapped down about 116 for only a minute, and then more news started to be coming out. More news was released, and it coming back to about 122, and then I heard it's even up higher than that in the after hours.
Keenan, is this a lot due to what's going on with the Kindle and the introduction of all of these e-readers? You can't seem to go anywhere without hearing about either an iPad or a Kindle or a Nook coming out from Barnes & Noble.
You know, you're absolutely right. And I've had a Kindle for a year since they came out with the second version. I absolutely love it. And you're creating a new category, whether it's the iPad, which was released, or the Kindle. There's going to be a lot of push, which should create a rising tide for all of the manufacturers of these guys. And there are really not a lot of players in the market. I don't think Sony is a serious threat to the Apple situation or the Kindle. I believe both of them have tremendous futures for the next couple of years. And the way they're going to interact into the reading public, whether it's with the student sector, which is huge, or just the general public reading casual books, I think has a ton of upside in the next few years. Well,
if you take a look at what's going on Amazon.com stock, as you say, trading at $131 right now.
Wow.
It's up $7.80.
Wow, it's a huge run-up.
Trading.
Yeah, huge run-up.
Keenan, talk about the general market right now. We've been looking at a day in which the market sells off, but then trades higher as it goes into the close, although it does end lower by over 100 points. Is this a time for people to be waiting on the sidelines for something bigger to happen?
No, I think once you wait for something to happen, in any case, whether it's buying or selling, you tend to be a little too late, and you're not really maximizing your abilities right there. But you said something key. The market traded up from its lows, and even though it closed lower for the day. That's been happening for several days, and not just today. Today was a little more of an extreme example, but yesterday and then several times over the past 2 weeks, we've seen sell-offs, and then it's kind of claws back. I simply due for a correction. The market has run a long way from March of '09, but we're still in a bull market. There are still new highs coming, in my opinion, over coming months, and therefore a sustainable downside move is not in the near-term future, and that's why you're seeing buying on the dips, which I think people should be doing right now.
All right, but you mentioned something key I want to ask you, Keenan, which is sustainable downside moves. So could we get maybe a 5% correction from current levels?
I think there's a further risk of about 3%, and, of course, what's another 2 among friends, right? But looking at the Dow Jones, you could pull all the way back to a little over 9,700, the S&P of about 1135, 1035, 1040 maybe. So, again, 2, 3, maybe 4% further on the downside. Go back and look at March 2004. The market had been up for a year, and in March of '04, we started a consolidation phase that went from March to August, and it was about an 8% range on the S&P. We're at the lower end of perhaps that range. Maybe this correction is at least 2/3% done, if not more. And then you can see bounces. Keep in mind, though, that if you saw a bounce on some issues that were not real strong, don't be afraid to take some profits because we might be in this range for a little bit of time.
All right. I want to thank you very much. Keenan Hauke coming to us from Samex Capital saying we might be in this trading range for some time. Don't be surprised if you get maybe a 3 or 4% correction, but then Keenan Hauke going long.